welcome back to the channel, guys. We are back with another video, and today we are going to talk about a chart pattern, a market structure that normally indicates a continuation in a trend or a reversal. So this market structure is a two-way street, so it's either a continuation or a reversal, and let's see how it works. So before I forget, I want to just mention we have a Telegram channel which is free to join, and the link will always be there at our channel description. And we have a YouTube live on a daily basis to do some live analysis, and we'll try to point you in the right direction of all the trends we're doing. So the video today is about symmetric triangles. So these market structures, what do they really mean or try to indicate in the markets on the charts? Symmetric triangles can always go either way of the price, so they can go up or go down. It's either way. But as soon as you see a symmetric triangle format forming on the chart, it means you're going to just wait and see where the price breaks, which side the price breaks to. So in this situation, the price broke to the upward side, and what opportunity did the currency present to us? It presented a retest of the demand that pushed the price up. So it means price broke up and it came back into our retest, and this was a Friday. This was a Friday, and it broke out, came back, and retested into the zone. This created some liquidity sweep to the upward side before the price came back again. So the opportunity to enter a buy order right here was very good, and another opportunity was right here with something like a 1 to 3 or 1 to 4 risk to return, and the same thing happened here. Now we are going to look at a couple of examples to try to understand how this works too. So let's try to see another example I've just seen right here. You can see price forming that triangle again. Price goes up, comes back, goes up, comes back, and trying to converge into a small point where it breaks out at the end. Now this indicates price has broken to the upward side. Now you're going to target the point where price breaks and wait to see how the market reacts when price comes back there. It always presents a good opportunity as a continuation of that side where the price broke to. So symmetric triangle, price breaks to the upside and retests into the demand where you can get an opportunity to buy. Symmetric triangle again, price breaks to the upside. This is also a buy opportunity, but the retest is a more confirmed and more we can call it a smart risk or a high probability setup. So these are the setups we are always looking for in the market, high probability setups. So you can set up your order right here with a very limited small risk but a good return on that setup. So setups like this, there will be something like a 1 to 3, 1 to 4, 1 to 6 also. So it means any setup you get, and you can catch the move. All the simple setups that will fail, one move will always cover up your 3-4 failed setups. So you get 2 or 3 in a row, then you'll be on your way to a good week, more or less a good month. So let's try to look at other currencies and see. I've already spotted one on AUD USD. As you can see right here, there was a symmetric triangle. This is a 1 hour chart on AUD USD, and this is on 4th and 7th, which was a Friday and Monday, 4th and 7th of August on AUD USD. You can check that for yourself in the 1 hour chart. So there was a symmetric triangle right there that broke to the downward side. Now if you look at where the price broke from and you try to you mark something like a triangle or a line, a rectangle or a line there, you'll see how price reacts when it comes back to this exact zone. Now this will always give you a high probability setup, whereby you will risk a very minimal to get something like a 1 to 2, 1 to 3, sometimes up to 1 to 6 or 7. Now here the second setup had a huge liquidity sweep, but this first setup is always a high probability setup. Now it means you just have to understand how these currencies, how these market structures work, and where could the setup be. Let's try and see if we can get any random trade and see. Okay, let's say NASA 100. If we can get any symmetric triangle on the chart and see if we can try to show how that works as another example. But you have to always put into consideration that you have to manage your risk properly before opening any positions. Otherwise you can always get a very good setup and then you spoil it by opening a huge position, whereby you destroy your setup because of the risk. I've noticed there is one right here, a very good symmetric triangle. As you can see right there, price came in and started converging into a small point till it broke out. Now if you look properly, price came back and started rejecting around the same level, broke through, came back again and started pushing down again. Although this is not the same as the one we've been seeing on AUD USD, but we're just looking for some other example that we can look at properly and try to understand what we are talking about. This is another very good example. Maybe it will create some good this will look properly here. You can see that move, because it's a 1 hour chart, is kind of in the big candles, but you can see how price goes from huge volume into small volume, and it converges into this small triangle. Now this is either a continuation or a reversal pattern, depending on how the market creates a structure after the triangle. Now here the market went into a range and broke to the upward side. Now what does this mean? We are going to take this demand and we see how the market reacts every time it comes back into this zone. Price came back, pushed up, came back and created that impulse move. Now those are the kind of example I want to show you always. So this is our video about asymmetric triangles. What opportunities do they present in the market, and how do we approach such a situation to try and capitalize on such good information? I'm seeing something else here before we close our video today. Let me just try to highlight this symmetric triangle right here, highlight that symmetric triangle that broke to the downward, and then it came back where the price broke from, and you saw how that move was created right there. So guys, try to understand a symmetric triangle is just a market structure that tries, in simple terms, the price converges into a small point where it breaks to either side of the chart, up or down, either side of the trend, either side of the price, either up or down. But if it breaks to any side, wait when price comes back to that zone where it broke from and try to see how the market reacts to that zone, and that is always a high probability setup that you'll end up making some huge returns from. So thanks for watching guys, and keep it up. If you haven't subscribed, please subscribe and share this video with all your trading community, trader friends. Thanks for watching and